one of the things that typically happens in these very large moves is that the market creates moves intrinsically. What I mean with that is when you look at people who have some kind of positions on, those positions then get lopsided because the market moves in the other direction. If they move in these magnitudes, on top of that, you have vol spiking, you get a significant VAR shock. And that forces people to take down their positions overall. And obviously, they have to sell into a falling market already or have to buy into a rising market in the case of treasuries. And that then reinforces itself. So I think we are in a position now where the market moves create market moves, which I think is very important to recognize. But as regards the Fed, at the moment, when you look at the labor market report in a bit more detail, I think there are some legitimate concerns about whether it was actually as weak as it was stylized. And I think the Fed will look at that as well and will think like, okay, we're trying to analyze all the data that comes in, as they said. So we think they probably will still go 25. But obviously, if these moves accelerate, that will put a lot of pressure on them to do something else.
And we've already seen the market retracing about 2 months worth of gains. This is no longer a rotation, Peter. We're now talking about an all-out market revolt. So how much further do you think stocks need to fall? And what are the signals that you're looking out for that will give you the confidence to say the worst is over?
Well, I think first of all, it's the dynamics. The dynamics, as I was just trying to say in my opening remarks, we're now at a point where the market moves are reinforcing market moves because other people will look at that and will say, oh, hang on a minute, I've got the wrong position here. I need to get out or I need to get in. So as long as that's happening, as long as you see these dynamics unfolding at increasing speeds, as we've seen overnight, particularly in Asia, I think you must assume that there are still a lot of people out there who are positioned the wrong way around. And by the way, if I may say, I think on top of all the story about recession in the US, I think the moves, in particular the yen, must not be disregarded. I think they're very important, and I think they're driving part of that as well.
Peter, Sylvia here. I would like to get your thoughts really on what could be the opportunities amid this market. We know when there's a sell-off, some investors always look at the buy opportunities here. We also heard over the weekend that Warren Buffett cut the exposure to Apple, is now holding more cash and treasuries. Is this the right approach when you think about the huge sell-off we're witnessing today?
Well, I think it's probably too early to think about that. As I was just saying, I think there's a lot of people who ultimately have to take a view, even if they don't want to. And even if you look at fair value in these environments, and be that at valuations in certain stocks, or be that indeed about the amount of rate cuts that are being priced in the front end of the curves, at these points in time, these absolute valuations, they matter very little. There might come an opportunity in a week's time or maybe 2 weeks' time when you look at valuations and then you think like, oh, we're priced in too many rate cuts. I have to oppose that, or the spread levels might be wrong or something like that. But I think at this point in time, I mean, we're basically less than 24 hours into this in terms of market trading. I think that's definitely too early.
I would also like to understand what you're looking out for, because it seems that it's very far in the future, really, until we get the next Fed meeting. What sort of economic data will you be looking at to understand whether they will go ahead with those 50 basis points in cuts?
Well, I mean, there's some of the, first of all, the Fed has told us, in fact, all of the central banks have told us that they will be looking at a broader suite of data. I think, by the way, this is very important in my mind. Well, and that ranges from the Fed to the ECB, indeed to the Bank of England, who had a meeting last week, where they essentially said, we're not focused anymore on, let's say, just inflation. So I think that's very important. So therefore, I think literally most of the macro data that comes out now becomes important, and particularly now with the focus on labor markets and growth, all of the leading indicators. And in fact, like this morning in Europe, we had the latest batch of peripheral European PMIs, which came in weaker. So I think this is something that the market will latch onto. So anything that gives us a guide as far as the growth picture is concerned, I think that's important. And if I may say, one of the other things, of course, that has in part sparked the rally, and therefore sparked the rally in treasuries and the sell-off in equities, that is becoming more important now is individual earnings calls. So we have to look at those as well, particularly if there is some announcements about layoffs embedded in it.
Indeed, Peter. And before we let you go, of course, investors right now looking at what all of this means for their portfolios. As we track through the rest of the European trading day and into the US Open, what's the most important thing to watch?
Well, I think it's, first of all, it's credit spreads, because credit spreads have been extremely low, and you have to, they have been rising, but so the magnitude of that is very important. You mentioned the equity market already. Of course, that is important, the magnitude and speed of that. But I would also say those positions where people typically went into the summer and thought like those are going to perform well. That's any kind of carry trades, let's say credit or in the sovereign markets. Short vols have been spiking. Both the VIX has been up, but also bond volatility has been up. So how far will they go? I think all of these things that people typically had on expecting a more quiet period, and now we've got everything but. That's the thing to watch out for.